Black Earth offers a full suite of humic solutions, from high-purity granules to powder, liquid, and soluble formulations, all powered by pure humulite. Trusted by growers worldwide from one of the world's rarest humulite reserves. Grow stronger with the power of Black Earth humulite. Learn more from Mind to Market by visiting blackearth.com.
Okay, let's talk markets here on this Wednesday. We're joined right now by Neil Townsend out of Winnipeg, Manitoba. He is with GrainFox. Hey, Neil, how are we doing?
Well, you might hear some sirens in the background. I'm in the urban environment of Winnipeg, and no, those sirens aren't coming to resuscitate the markets.
I was just going to say that those are just regular sounds you hear in Winnipeg right there. That's the sound of Winnipeg.
That is Winnipeg's national anthem, yeah.
We're okay. So the poor markets, and we're kind of in, we're into July here. I guess we call it a bit of the dog days of summer, a bit of the dog days of the markets too, right?
Yeah, I mean, I definitely think so. I think the one unique thing about, say, the 24-25 marketing year and the 25-26 marketing year is like it's the fact that it's not so much supply that's scaring the market, it's the demand front that's really scaring the market. I think the demand is like, is it ordinary? Is it historically low? I don't know. It's just not exciting. And with no excitement in the demand sector and no major sort of production worry, I mean, it's just a recipe for everybody to be sort of laissez-faire and trade the market down. Now, again, demand sometimes creeps up and surprises you. And supply, we could still have some yield detriment in the remaining weeks for the row crops in the United States, or definitely for the spring crops in Canada. But each passing day sort of deteriorates the possibility of a large yield wipeout.
Neil, how do we? I know how we predict supply, right? We look at planting progress across North America. We see the weather pattern. We look at how the crop's doing. We'll get into August, and we'll, especially on corn, we got a lot of different crop tours that happen, and combine starts to roll. The predicting supply, it feels tangible. How do we predict demand? What does that actually look like?
Well, and that's the $64,000 question. I mean, I would say that, without having sort of, some sort of an industrial product that we're producing. So, on say the biofuel side, it's probably a little bit easier, except there's so much substitution available and, what's used cooking oil, what's not used cooking oil. I think the big thing is with demand is what you always hear about is retroactively somebody looked and, there was a catalyst. So, for example, back at the start of the century, there was that wheat belly era where everybody was scared to eat wheat and, the consumption of wheat fell off, and it was tangible in like Europe and North America and places like that. And, it was sort of like, okay. And then we sort of corrected for that. And then lo and behold, that was a fad. It fell away. And at the same time, like the consumption of wheat started to go up in countries like, Southeast Asia, China, those places. So, it's sort of like, then we got back into a period where, not just wheat in itself, but through a bunch of different things, but then, the demand was there. If I'm looking at 24-25, I'd say like my question is, and this is the big thing that, you talk to analysts around the world, like I talk to, colleagues in Australia or Europe or the US or whatever, and they're saying to me, well, like wheat demand is just like wheat import demand is, it's noticeably dampened. It's not as exciting. It's not growing. And it's very, very rare in the past to see that kind of like tangibly go down. And it's gone down, certainly for 24-25, and all the projections have it sort of like flat or marginally up for 25-26. I guess, I don't think we'll ever really solve the problem in the moment. Like we won't say, here's why the demand went down. I guess some of the questions I would have, and it's sort of a longer term thing that I'm sure people are going to start talking about, is like, aging populations, like the effect of, the GLPs or whatever they call those.
GLP,
like
the GLP-1 blockers, yeah.
Yeah, GLP-1 blockers, or people like eating less bread because of that or whatever. I mean, but again, I think like those kinds of things, because we've been like burned so many times in the past where, it turns out to be a fad, but, and then, people start eating and consuming just as much as they were. Cause I mean, like even in the pandemic, like the home baking became a huge thing, and you could barely keep flour on the shelves. And like, domestic flour millers in Canada and the United States had really good years because they were producing like higher margin, sort of smaller packages of flour that they could put into Safeway and Sobeys and Costco and stuff like that. And they were, it was hard to find flour at certain times because they couldn't keep up. And then now I guess people are done with the home baking.
So those are, like, as I'm listening to that conversation, it feels those are like longer systemic trends around demand. And how long they last, that's, there can be variables to that. What about in the short term?
I think you're exactly right. A few comments that people have told me is like, okay, for example, there used to be gas tenders, like the way Egypt would buy wheat was very sort of like, transparent and noted. Right now, they've sort of shifted it into a more like, it's not as transparent. So like, are they buying the same amount, but just from like so many different sources? And is there some gray market wheat going in there from Russia or something like that? Like, or is their demand actually scaling back? And if you just multiply that by a bunch of countries that are not, like, there's very few public tenders anymore that there were that characterized certainly the wheat world for years and years and years. So, and again, is that sort of like when you take maybe the government element out of it and it's more like it's in the private hands? Is there less wastage? I don't know. And I don't think there's an immediate demand an immediate like answer for what happened to the demand in 24, 25, because, if you look in relative terms, you certainly wouldn't say that like wheat had priced itself out of the market. So people were shifting to other cheaper things. Like wheat was fairly priced. Right now, there was for most of 24, 25, it started to kind of decline in the last 3 months. I mean, there was a very strong U.S. dollar. A very strong U.S. dollar would be somewhat discouraging of purchases of, food, I guess. And a lot of the countries that are purchasing food are amongst the poorer countries in the world. And so a shortage of foreign currency could have played a role in that. But again, now the U.S. dollar is weakening. So let's see if 25, 26, says, okay, it wasn't that, or it was that, or whatever. But yeah, I mean, I'm going on and there's words coming out of my mouth, but there's probably no satisfactory answer, except like when I'm in discussions with sort of a group of people that I talk to every week, there's no sign yet that at least the fundamental situation driven from the demand side is improving in wheat. It's still sort of a negative outlook.
And as you look at the broader commodity complex, when we do have these multi-variable, general kind of just concerns or awareness of some hiccups or barriers in front of us to really get the bulls activated, it kind of creates what we have right now, which feels like just a soft trade, and we're drifted to just destined to go lower right now. That's I'm not sure I'm providing a real clear, concise statement there, but it feels soft.
Yeah, I think you're right, because I mean, one thing, there's a very big difference between being scared and being uncertain. And so I think the market is very uncertain right now. So you could use the word nervous, but you could just say, like, I don't know what's going to happen. But it hasn't manifested into fear where buyers and suppliers and end users are like, oh, you know what, I better secure, instead of 3 months, I better secure 6 months or 9 months. So there's no urgency in buying, even though, the whole like trade apparatus is really circumspect right now. And, right now, today and yesterday and going forward, I mean, Trump, empowered by, let's be clear, I'm not a Trump fan, but he's had many victories in the last couple of months, like, things that have emboldened him to say, I am on the right path and I'm going to keep doing what I want to do. So, now we're looking at, the tariffs, and I don't think the market really believed that the tariffs would be put back to like 25 or 40% or whatever it is. That's what he's saying. I mean, maybe it will be extended, but August 1st is not that far away. They did not get the 90 deals in 90 days, but I think like from a commodity standpoint and like, the stock market was weaker yesterday, but let's be clear, the commodities were weaker than the stock market in relative terms and showing that, they don't like this environment for trade, but it's not like, corn went down 20 cents or soybeans went down 27 cents. it's not like all of a sudden a bunch of buyers, oh, okay, well, that I was just waiting for that to happen. I'm going to buy, because they are still uncertain. They think, well, even if I buy today for a longer term out there, I might be buying too high because big crop coming in the U.S. They're not making a trade deal with China, so there might not be like an incremental 4, 5, 6, 10, 20 million tons of exports compelled by sort of call it a phase two circumstance out of a China-U.S. deal. So, again, I understand that would slow down that side, and it's also slowing down the other side of, people like looking for markets because they're kind of saying, maybe there's time. Now, from a Canadian perspective, I think one thing that's unique is that, we only have so much rail capacity. We only have so much like seaport capacity. And, ultimately the line companies here, they want to be going, I won't say 52 weeks a year, but I'll say 50 weeks a year. They want to have their terminals being utilized and churning as much as possible in order to, break even or hopefully scratch out a profit in a year, right? And so like a slow pace of buying or this uncertainty probably doesn't feel very good from their standpoint as well.
Yeah, great point. Neil, we talked a little about wheat demand here, but let's just jump over to corn for a second, because that's really the direction of the market. And we're recording this on Tuesday night, and I see in the near term month we've traded below $4. It seems though $4 is a bit of a mental mark for corn, especially as we look at that DEIS. And if we go below that 4, probably the next place we're looking is like a 385, 386. If you look at the like a multi-year chart, kind of a concerning time here as we test some of these lows.
Yeah, definitely. I mean, I think we're having sort of, vectors come in from a couple different angles. Like, first of all, there's abundant confidence right now about the U.S. crop outlook. I've seen some yields as high as like 186, 187 that people are bantering about. It's been a while since we hit trend, and so, I guess we might exceed trend this year. It's possible. Again, I would say that, corn probably has 20, 25 days of critical weather left, and if that sort of cooperates, I mean, I guess you could bring home a massive crop. They certainly planted a lot of acres. And then the other vector I think that really unnerved the market yesterday was, just sort of news that, and this was sort of floating around. I don't know if there was one specific article about it, but just that, like China and the U.S. are not close to a deal. And I would also warn listeners that there's no certainty that there will be a phase two compulsion for China to buy U.S. ag products. And corn may not be in there, but I think what sort of the market reaction yesterday showed me is that the market does think that, I guess they're kind of scratching their heads and saying like, what could China buy to kind of even the books out, like even just modestly. I mean, they'll never even the books out, and I think they come down to like soybeans, corn, and beef and other things like that. But, and I think what they're hoping for, and again, I think it's a little bit of desperation. It's a little bit of a Hail Mary. They're hoping that the number is like, 10, 15, 20 million tons of corn. But yeah, I mean, I guess, but if you believe Chinese statistics, which again, of course, you'd be a fool to believe. I don't believe them, but the point is that their internal corn price has come down. Like it used to be well above the world price. It's still above the world price, but it's not as scintillating as it once was, right? So that to me indicates that like maybe they don't need as much feed grain as their own supply is more sufficient than it has been in the near past. So it could happen, but I mean, I think if you're building sort of an outlook on getting corn to sustain itself above, say, $4.50 or up to $5, and that scenario is like, well, China has to buy 15 to 20 million tons of corn. I don't think that's a very good starting point without more information along that way. And so then you turn to the alternative and say, okay, well, if we don't have that 15 or 20 million tons of incremental, unexpected, or, prayed for, hoped for demand, I mean, what does it look like? And I think the answer is it looks a little grim. I mean, because it looks like a huge crop is coming from the U.S. and, they're going to have to look for market share, and they're going to have to take market share from South America. And, I think brand America is maybe not as attractive right now as it once was in some of the offshore markets. So I don't think it's a slam dunk that the U.S. corn export program can show growth without China, right?
Yeah, there was rumors last week that when President Trump gave that speech on the night of July 3rd, right before Independence Day in Iowa, there was rumors that he was going to make a big announcement on a big sale of corn to a country like China, but that didn't happen, and left some people kind of disappointed. I think, if I think back to last winter, what I heard from a lot of market analysts, Neil, was concern about China's economy and their demand for ag commodities because of that. I have not seen anything that would lead me to believe that things have changed economically in China. And so I don't know where all this, from some circles, the optimism is that, where this optimism is coming from, that China's going to be buying all these commodities, because there hasn't been a flip on the economic side, but I think it's sort of like Trump's going to will it, like he's just going to make it happen, or force them to buy it. It is a little bit confusing for us simple people here trying to sort all this out.
Yeah, well, I think it's a great point, because I always say there's three types of people in China. There's a huge group that's like, China. They're just so powerful. They're so ascendant. They're going to do whatever they want to do. Plus, their government can just order it and it can be done. Then there's the alternative to that, and that's China's in decline. China is going to be broken up. China's, it's a house of cards waiting to collapse. And then there's the middle ground, which I think most reasonable people are in the middle, is that if China's a big country, just like any other big country. They got pluses, they got minuses. And, I want to be in that category. I want to be in the middle category and say, let's look at them strengths and weaknesses, and what I would say is that undeniably, they have really struggled coming out of COVID, right? And I think what we've seen is something that was, brewing to happen, was that, they have not left much room for a huge, population-wise, there is a big one, but they don't have much room to grow their domestic economy, demand, just the consumer demand, because the consumers all have, they overbought apartments already, and that's been a problem. They all probably have a car if they want a car. So, they need offshore markets to have growth, right? But because their own domestic market is sort of saturated and sort of, reached more, they could always have more. The Americans can find a way, I bought that TV 2 years ago, it's outdated, I'll buy another one, right? And the Japanese are a little bit like that too. But, because the Chinese market is like that, there's some unique things that fit into the Chinese market good, but it's not it's not like, even left to a free market, it's not like their domestic demand would sort of start surging above their sort of punching weight of population and start buying more and more, because the people just don't have capacity to buy that more and more, right? They're sort of leveraged out, I guess is what I would say. And that's why they're struggling out of COVID, in my opinion. When you look at the sort of the food side of that, I mean, they'd had a 20-year growth of abundance of everything's available in the grocery store, everything's available on the menu, all types of animals, all types of meats, all types of fish. So, people are used to having plenty. They're not used to shortages anymore. And I just, as their modern farming technique improves certainly on the northeastern corn and on the central plain, it's not out of the realm of possibility that, they have had crops that are closer to what their official numbers are than maybe some of us have thought in the past, and that they don't actually need to have this huge import program. Now, there's always going to be some arbitrage opportunities because China's a big country and east to west, north to south. But I just don't know if this era of growth is going to save us. And actually an interesting sidebar here, and you know this well from your times in Western Canada, is for years and years it was China, any surplus we're going to sell to China. And then as China sort of backed off and as the relationships between Canada and China got rockier, one country that for the last 3 or 4 years we've tried to kind of say maybe they'll enter the fray and buy some non-traditional things like wheat or something like that is India. But again, people in Canada, I think consistently underrepresent or underestimate like India's production capacity and India's efficiency at producing like massive agricultural crops, right? So yes, they did have a couple stumbles in the wheat, and they really resisted importing there. But then lo and behold, now they've had a good crop, and now they're not even in the conversation of it being an incremental wheat importer. So, you know, I'd say that's a similar pathway to China, whereas, you know, you have these numbers on China, but China sets a policy that, you know, works for China. They're not really thinking about the Canadian farmers. And India sets a policy that works for India. They're not thinking about the Canadian farmers.
As optimistic as we are about the corn yield in the U.S. and what that means from a supply perspective, maybe the reverse is questions on what happens with canola.
Yeah, I think canola.
Sorry, go ahead.
I think canola is very interesting. I mean, my outlook on canola, obviously we saw what Stats Canada did. Everybody knew it had to happen. They increased some production. You know, I think some of the trade or some of the perpetual bulls or, oh, there's more, they're still too low or whatever. Anyways, I think they gave us some numbers that we can operate with. And, you know, I think that it's, you know, like you add 500,000 tons, take away 500,000 tons, whatever makes you happy. It doesn't matter. But I think canola is an interesting one because I think what we've seen in this last 12 months is that, you know, there is a market space for canola regardless of the headlines around the world, and even regardless of some of the trade rules that you would think would have really stifled canola demand. And so we were very fearful that, you know, there'd be repercussions on the crushed byproducts because of the U.S. There doesn't seem to have been very many of those. We were very concerned about our export potential to China because of their sort of, you know, negative feeling towards Canada. And, you know, maybe we lost a little bit of market share there, but we were able to place a lot of canola in other countries and there's steady demand. All being said is that, you know, the growing season, I think, is highly variable in Western Canada. I think there's patches of quite good. There's a big area that's average. And then there's definitely a tangible area that still needs a little bit of assistance to get across the goal line and score a touchdown there. I don't think that even with all of the additions that we knew had to come from Stats Canada, I think that the canola outlook remains similar to where we were in 24-25. And this is a big one. I really shifted my outlook on canola from wanting to be front half heavy sold to back half heavy sold. So I used to be, you know, 60-40. I wanted to be done by Christmas. And now I'm 40-60. I want to sell 60 after Christmas. And I probably want to leave some in the period that doesn't make me necessarily comfortable the last quarter, because I think that we're still super set up for another situation like we could have been in this year. Because imagine a scenario where we got to June and the crop conditions in Canada looked even worse than they did. And we've had those, right? And what if July, if we had, like, instead of the nice little bits of rain we've had over the last couple of weeks and some forecasts for a bit more rain here for some parts of Western Canada, if those didn't exist, you know, we might be like people might be talking about a mid-30s yield instead of a high-30s yield. And that would probably be making it even more exciting. And we already had a pretty nice rally there for a bit of time, come off obviously in a significant way. So I think canola will remain interesting, but I think farmers will have to take sort of a total farm approach, meaning, like, you know, if you're patient on canola, you might not be able to be patient on like oats or barley or some of your pulses or wheat.
Just going to say that it sounds like we have a divergence here on your marketing allocations on canola may be different than some of those other crops in the farm, and especially in the cereals.
Yes. I mean, I think the way that wheat in particular is shaping up is, you know, one thing I will say, and we were pretty negative on wheat in the first segment there. And I would say, like, one thing that's been proven definitely over the last 24 months is the resilience of Canadian wheat. There is demand for Canadian protein wheat, and some of the early results in Europe, like, for example, in Germany, have shown, like, you know, large yields but poor protein levels. And again, that works in the favor of Canada because, like, German wheat would be a protein competitor to Canada on the offshore market. But if German wheat is, like, you know, half a percentage point lower in protein than usual, you know, then, like, Canadian wheat becomes a better deal for importers, right? So again, the German crop is not in the bin yet. So we don't want to, like, say, oh, you know, this is the way it's going to be. But, you know, the early indications are that, you know, there's not going to be abundant protein. And we know, like, France, which isn't counted on for protein, but I mean, France has all the problems they had last year with a very wet crop, and you know, it's not going to be a great quality crop. So quality considerations, color, and protein, like Canada's going to have that, and you know, we've seen over the last 24 months, like there is a steady demand, like 1.5 million to 2 million tons of that a month, right? And people have been able to buy it. So. And we've moved it. So, I mean, I expect that to continue. But in that, because the bottom of the wheat market, like led by Chicago and, you know, Russia, Ukraine, those places, and France, it's pretty weak right now. And that's going to be sort of like an anchor on where even spring wheat prices can go. So what that means is that, you know, farmers or producers, they're just going to have to be opportunistic. When they see a special, when they see like a 25 or 50 cent premium, or the market goes up a couple days, you know, at this point of time, like, you know, speaking today, like, I don't see a sustained pathway where we would, you know, systematically chip away or, you know, add to and gain like $1 per bushel for wheat, right? So if you see like a spike where it goes up 25, 30, well, check the reasons, check the rationale. But if the reason's like, I guess it's just some nearby demand, I mean, those are the kind of things that I think you want to be selling wheat into. Yeah. And again, I would say that, you know, the crops that I sort of want to be patient on are canola number one. You know, and again, that's admitting that there was probably a very nice opportunity, you know, at the start of June that, you know, could have added to sales there. We didn't add to sales from the GrainFox perspective because we already had sold a slug of new crop, and we were just worried about getting too far in front of our skis, maybe, so to speak. But, you know, we certainly, people who hadn't sold at that point, or catch-ups, or even going a little bit advanced, we sort of, you know, lightly recommended that. But now I think, like canola, I think patience may pay off in canola, and opportunistically for wheat. And then for things like barley and oats, I think opportunistically is also, you know, the word of the day. And the pulses, I would say it's a combination of being opportunistic, looking for movement, but also probably some patience on some of the fronts there would be rewarded as well, I think.
Yeah, great stuff, Neil. Hey, we've been talking to Neil Townsend with GrainFox. You can find out more by going to grainfox.ca. Hey, Neil, thanks so much for joining us here today.
Thank you very much, Shaun.
For the latest ag news, agronomic advice, and more, check out realagriculture.com and Real Ag Radio.